Good morning and welcome back to Almus Market Mornings. Relatively quiet day yesterday without any major updates, but the statement by Treasury Secretary Bessant are of concern. In an interview, Secretary Bessant said the secondary tariffs on India could be hiked for buying Russian oil. This is happening in the backdrop of the meeting between Prime Minister Modi and Chinese Foreign Minister Wang. The dollar's strength continued yesterday, evident in majors as well as gold. Rupee had a good show of strength yesterday, closing below rupees 87 in the onshore trade. JK, what are your thoughts on these and the rupee? Do we expect further strength from here, or should importers start covering their dollar payables?
Good morning, Swaraj. Yes, Rupee has made modest gains yesterday on the back of not having any fresh bad news, and then Ukraine peace hopes. Optimism on stock rallies, bringing back FIs also was there. Then China easing curbs on some of the exports to India. Even as the officials from both the countries are meeting, and there were also technical stops on break of 87.20, leading to longs unwinding. Now, at the same time, as you also mentioned, the Treasury Secretary talking about higher tariffs on India. And even as you know, there have been 25% basic tariff is going to remain. So this is not, this is going to be a challenge for India for some time until we have major government efforts to, diversify the export destinations and other support measures for the export sector. So the GST reform alone while it can boost consumption and actually make up for the growth which can be hit by the exports, still external sector remains a challenge. And definitely with India getting you know uh, better ties with China and all that. So there's the high level geopolitics is playing itself out. So that is the background where US is keeping its tough stand on this matter. So the rupees gains, I would say, is possibly temporary, perhaps led by some flows as well. And if there is some more flow, I won't be surprised to see 86.60 also. But the underlying challenges are still there. Therefore, I would think that the rupee will be kept uh, by the authorities on a weaker range, and until at least these external challenges are improved. Therefore, I would think any dip below 86.90 up to 86.60 should be more. There is no change in the trend in the rupee as of now, because the conditions which has led to the weakening in the rupee has not changed. Yes, of course, geopolitics, obviously Russia, Ukraine, peace talks and the ceasefire, these are ongoing. And some of the questions, is there optimism? Yes, there is a cautious optimism. And whether demands of Russia are agreed to by Zelensky and Europe, they seem to have, but in turn, they have demanded ceasefire first and security for Ukraine, which US has agreed to provide. Has Putin agreed to meet Zelensky? Yes, White House has said yes, but not certain when that will happen. And finally, Trump does not rule out the possibility of a deal, but also consider Putin may not want to make a deal at all, which would create a rough situation for Putin. So, if from all this, it appears that there are issues which are yet to be ironed out, and before that, you can't see a deal will be done, and the timing is definitely uncertain. I feel the crucial thing would be Putin's response, which will be crucial. So while this takes time, I think market's attention is more and more towards upcoming Jackson Hole meeting starting on Thursday, and especially the stand that Powell will take. And is there going to be a shift in Powell's stand, considering that job market is not as strong as he stated in his previous speech after the FOMC, and also inflation, barring the latest PPI, has not shown up so much on due to the tariffs. Now, that is going to be probably what market is looking at, and if he continues to maintain his stand of wait and watch, that will be a huge disappointment for the market, because Fed, rather in FOMC, majority is still on the side of maintaining steady policy, while there are some three dissenters already. for pushing for a rate cut. So this monetary policy is, at least for this week, monetary policy development evolution will be closely looked at. Also, market looking at some of the statements from Besant, that he's very bullish on the tariff revenue that is being collected, and he says it's going to be much more than the 300 billion that he has indicated earlier, and we are going to bring down the deficit with this. And another news has been that S&P rating agency actually maintained the rating of US at AA plus, and they were also expecting the meaningful tariff revenue to generally offset weaker fiscal outcomes. So that's some sort of an acknowledgement for a new measure that the US government has taken, although it has created a lot of uh, dislocation in the global trade. Also, when Treasury Secretary is pushing for a rate cut, he's also hinting at the housing market, which needs a support, which is slumped. Rather, the housing market is in standstill, and without lower rates, that market is unlikely to pick up. And he says that with the housing prices do come down, activity picking up, that is no reason to think that the inflation will stay high. And also, if their intention of asking Fed to cut rates is to bring down the cost of financing the debt for the government. So if this is met, or rather, if there is an inclination to meet this, policy focus from the central government, sorry, the central banker, I think it is some sort of a positivity building for US, because now that the tariff revenues are going to be maintained, and then if the fiscal maintenance cost or the finance costs are also going to be brought down, it's probably some sort of a relief for the big concerns about the US economy. But it is too big to be addressed in a very short period of time. I think a lot more will have to be done. But I think it's given time for the market to stand and stand still and pause on selling the dollars. That's the reason why we have seen some uh, prof- profit taking perhaps on the dollar shorts, particularly against the major currencies like euro, yen, and even the commodity currencies. Oil has been coming off. Gold has also come off below 3320. Seems like a general dollar strength. Uh, Too much of short positioning may be leading to some sort of pruning of the positions. And as I've been saying for quite some time now, the correction in the dollar for its steep fall is probably not yet over. And I think we can expect some more post the Jackson Hole meeting for the market. So uh, stock markets, of course, despite expectations on rate cuts, have taken it on their chin, because one of the statements from big investor Sam Altman, he's thinking that artificial intelligence market is in a bubble, and he's likening it to the dot-com bubble that was seen in late 90s, and that has given some sort of a jitters to the market. Not that one statement would make all the difference, but then we know that the market positioning is also quite extreme, and the valuations are also extreme. Yesterday, even Dow touched a new all-time high and then came off, and S&P and Nasdaq were anyway on the selling side yesterday. So there is good reason to think that if there was to be some sort of a challenge to the monetary policy being eased, then we can see the markets come off. I think that's why very keenly look forward to event in the coming days. These two events, both the Jackson Hole meeting where Powell's speech, and then also the Russia-Ukraine war peace talks. These are two things that are going to be determinant for the dollar's next direction. Thank you.
Thank you, JK. And I think, as you rightly articulated, it's high-level geopolitics that's playing itself out when it comes to India, when it comes to China, when it comes to the US. A lot of things are going on, and of course, the peace talks between Ukraine and Russia. When it comes to dollar rupee, as JK mentioned, the range between 86.60 and 86.90, they can be used by dollar buyers to hedge. And more or less, there has been some profit taking in the dollar shorts as well. Dollar is trading stronger against majors. Gold has seen some correction, and so has oil. That's it from us today. Thank you for listening. We'll catch up tomorrow with a fresh round of updates.